So Chapter 5 is all about checking accounts and their purpose in business and why we use them. So a checking account is an account that you write checks on. So let's talk a little bit about money and cash in the business. Businesses use cash for lots of different things, but they typically don't want to have a lot of cash laying around because if you have a bunch of cash in the business, you can get robbed, people can steal it, you might lose it, lots of different things that could happen if you have a lot of cash laying around. That's why businesses a lot of times will use checks to pay their bills. Even though in this time of electronic banking, a lot of them are going to electronic stuff, businesses still use checks. Matter of fact, 50% of all businesses still use paper checks as their primary method of paying bills. Federal Reserve says that by 2026, which is only like 5.5 years from now, that checks will be obsolete, but at this point in time, they are not obsolete. So we watched this video in class, I think with most of you. If not, you can click on that in the PowerPoint and watch that video where it talks about people still using checks. So checking account. Checking account is a bank account you write checks on. It's one you use to make most of your payments and stuff out of. And a check is the form that you use to get money out of that if you're going to use a paper form. A lot of times checking accounts, you can use debit cards on them and different things like that too. But this is an example of a check. Most of the time they're going to have the business name and stuff up here. And you have the date, who you're writing it to, the amount in dollars, and then you sign it, and then you write what it's for. We're going to go over all of that in another lesson. To open up a checking account, all you do is you go into the bank, tell them you want to open up a checking account, you fill out a deposit slip to put money into it because you got to have money in there to start it, and then you fill out a signature card. So the deposit slip is going to look sometimes something like this. They don't always look like this, but basically they're going to have the name of the company on there, the name of the bank, and then what you're depositing. Currency is bills, like $1 bills, $5 bills, $20 bills, etc. Coin then, of course, is coins. And then any checks that you're depositing that people have written you, you add all those together, that gives you your total deposit. These numbers down here, let's talk about them for a minute. They are the routing number and the bank account number. So this first one up here is a routing number, and the routing number is the number that is unique to the bank that is doing the transaction. So on this deposit slip, Billings National Bank, this would be the number that is unique to them, and everything they run through that bank has that routing number on it. That's what tells the Federal Reserve what bank did that. So if they ever have to go back and figure out where things came from or where they went to, they can look at those. The other one then is the customer or the business's bank account number, which is unique to each business and each person. So checkbook with the check stub. In our textbook, they talk about check stubs because most businesses are going to use a checkbook that has a check stub, not a register. Check stubs can come in this form on the left hand side of the check. They can also come at the top of the check, but most businesses are going to have this form, and we're going to talk about how you fill that out over there. This is where you keep track of what you wrote that check for, who you wrote it to, what your balance is, and all of that, and we'll go through that here in just a moment. So when you make a deposit into a bank account, you're going to have check stubs. So this is the first deposit to this account for Delgado Web Services to open the business. So this transaction would have been owner invest money in the business, debit cash, debit or credit capital. Then this is the deposit form for the bank. When you get that check stub, that first check stub, you're going to write balance brought forward is 0 because this is the first check we're writing, first deposit. And then you write in there the amount of the deposit. You typically put the date and then the year. And then you bring your subtotal down. So you write that balance brought forward, the date, and the amount of the deposit. So let's talk real quick about writing checks. If grandma's ever given you a check for Christmas or your birthday, or your great aunt Mildred or whoever's written you a check, you have to sign your name on the back of it before you can cash that check. That's called an endorsement. There are 3 types of endorsements. So first of all, here, this shows the back of a typical bank or a typical check. There's the signature. So you have blank endorsements, special endorsements, and restrictive endorsements. So a blank endorsement, you're just writing your name on there. Grandma writes you a check for your birthday, you sign it, take it to the bank, they give you cash for it. That's a blank endorsement. Problems with a blank endorsement. Michael Delgado takes this check, gets it at his office, signs his name on it, puts it in his back pocket, and goes to the bank. When he gets out of his car or his truck, starts to walk into the bank, it falls out of the back of his pocket. Because his name is signed on the back of that, if I find that check, legally, I can cash that check because Michael has signed it and endorsed it. A lot of banks today will ask for ID, and so that would stop that. But the blank endorsement, if you're going to use that, you should only use it when you're standing at the window in a bank or in the drive-through before you're actually depositing or cashing it. A special endorsement then is one that gives somebody else ownership of the check. So Michael Delgado owes Helen Goldsmith this same amount of this money. Let's say it's $100. You write Michael Delgado a check for $100. He signs on the back of it, pay to Helen Goldsmith, gives it to her. Now that check belongs to her. That's called a special endorsement, sometimes called an endorsement in full. And then the last one is a restrictive endorsement. And basically what this restrictive endorsement says is we're going to deposit this into this bank account and nothing else can be done with it. If it says on the back for deposit only to the account of whatever, and you go to the bank and say, can I have some cash off of that? They're going to say no, because it restricts it. You can't do anything else with it. We're going to do these together. Then let's talk about the completed check stub and check. When you're writing a check, the first thing you do is fill out that check stub first. The reason they want you to fill the check stub out first is because if you don't, you will forget. If you're somewhere at Eastside Supplies writing this check, you pull your checkbook out and you write it and you say, I'll fill that in later. You may forget how much it was for, all kinds of different stuff. So you always want to fill that out first. So you're going to write the amount of the check, then the date, then who it's to, what it's for, and then you come down here and you put in the amount of that check. We had $2,000 in our account. We're writing a check for $165, so we subtract, and that's our new balance. Then you fill the check out. So then you come over to the check and you're going to write the date. You can write January 2nd, or you could do 1/2, either way. You're going to write then who the check is going to. When you write the name of the person to the check, you always want to start as close to the left-hand side of that line as you can, just so that they don't fill anything else in there. Then you're going to write the amount in figures. Again, start the amount as close to the dollar sign so that nobody can come in and add an extra 1 on there or something. You always want to put the decimal and the zeros or whatever the change is. So, because if you just do 165 and leave it, then I could write on there, comma, 000. Now that $165 check is a $165,000 check. Then the next step is you write the amount in words. The whole purpose of writing it in words is that if the numbers and the words do not match, the bank is obligated to go by the words. And that is because the words are harder to alter than the numbers are. But again, you want to start as close to the end of the line as you can. And then if you finish before, you draw that line over to the word dollars so nobody can come back in and write something else in there. Then you write what the purpose of the check is so you know, and then you sign your name. And that's how you write a check. And we're going to practice writing checks in class or with your assignment. If you mess up on a check, you have to void it. And that basically means you write the word void across the big part of the check so that nobody can write it. Some people will even take a black marker and mark out the account number and through the signature so nobody can get that check and do something with it. And then because you want to keep accurate records in your accounting records where every check goes, you want to write in your journal that you had a voided check so that when you're going through or you're getting audited, they come across check 23 and then it jumps down to check 25. An auditor's going to want to know where is check 24. And so you just write it in there to show that that was a voided check. It's pretty easy to do. And that's basically how you endorse checks and write checks and fill out a check stub. Now we're going to do work together 5.1 and application 5.1.